You were listening to chartingwealth.com for Thursday, the 17th of August, 2017. We see everything up for the day. That's the S&P 500 and the NASDAQ 100 is represented by QQQ, both up the same amount, 0.17%. Not a lot, but a little bit. TLT up 0.35%. And gold up the most at 0.71%, so almost 0.75% for gold. Now, don't forget, we talked about yesterday the fact that our next quarter will be ending at the end of September. Those of you who've gone through our quarterly training, you know what that's all about. You have your quarterly charts, and you've done the training and have the link to that. Those of you who have not yet taken that quarterly training, you need to take it. We gave you some idea yesterday. We'll do it again at the end of this podcast as to how valuable that quarterly training is. For those who are looking to invest in the long term, we really urge you to master that quarterly chart because the chart does seem amazing. It, going back 20 years, shows you when the market's crossed over and going down, when you should get out or short the market, and when it's crossed over going up. You only have to check this chart once every 3 months, so that's 4 times a year, and that training is available to any and everyone who asks for it. The only requirement is that you be a subscriber for free to the daily market review. How do you do that? You go to chartingwealth.com and you sign up, put in your first name and your email address. And then all we need you to do is to email us after you do that and let us know that you want the link to that training. We sent out tons of those today, but please, again, save us some time and energy. Don't let us know. Just send back to us an email from the daily market review that you get. Just respond to that and say, can I get the quarterly chart training? We'll fire it right off to you. We don't have to then go and check and make sure that you're a subscriber because we only provide that training to the subscribers. And again, subscriptions are free. Let's jump into these charts. We see that the weekly chart isn't a confirmed down move since crossing over at the end of the week, last week, Friday the 11th. What do we see forming so far? Appears to be a green spinning top. Last week it was a red spinning top, but again, derivative oscillators crossed over in the negative, and we have a much more decent distance. We were laminated for 3 weeks with the blue price percent oscillator over the red signal line. We now have the blue price percent oscillator below the red signal line, and we have the derivative oscillator in the negative. Again, this weekly candle's not drawn yet, still has 2 more full days of drawing. What's going on that 2-day chart? It is trying to move up. Now remember, we had a big down candle for the 2-day candle ending on Friday the 11th. That represented down moves on Thursday and Friday. Then the first candle that we had that ended on Tuesday, representing Monday and Tuesday's movement, was a green spinning top. Now we have a green up candle approaching, trying to push through the 2-day down trend line. We see that the derivative oscillator continues to move down, and we see that the price percent oscillator is continuing in a downward move. We'll continue to watch and pay attention. Let's hone into that 4-hour chart. It again stopped. It moved up in the morning and then moved back down below the 2-day trend line. If it crosses that 2-day trend line, we'll pay a lot more of attention to what's going on. When will this up move end, or will it be strong enough to rotate the 2-day chart over and start breaking things down? We don't know. But if you see this 4-hour chart, now that it's pulled back, remember it's moving in the opposite direction of the 2-day and the weekly, just like it's supposed to. We want to see a pullback. And then when and if it rotates over going down, when it crosses that red signal line, when that occurs, like it did back on, just for example, this is not an entry point, but just for an example, back at 4 p.m., on 8/8/17, that was Tuesday the 8th of August. That's what we want to see. When that occurs, that next candle, you jump in at the beginning of that candle. Now again, if it's in the morning, You wait until 10:30. We don't jump in during idiot hour. Remember, the market maker has too much control. Markets are swinging back and forth. The market maker is given a lot of authority to set the price of the security at that time when the market opens, as far as buy and sell orders. That's why you never sell at the market. You never buy at the market. You always sell on a limited order. You own a limit order. You buy on a limit order. So what are we talking about? We're going to watch and see if and when this 4-hour chart or the 2-hour chart. You can use that, not as accurate, but sometimes it can get you in earlier and can work. You know, we've seen a nice run up here. It does look like it's flattening off, and we see at the end of the day, both at the 2 p.m. and the 4 p.m., we've seen some down movement. So again, continue to watch whatever you feel most comfortable with. And remember, we're practicing, so give it a shot. Maybe what you do is you do 2 practice trades. You look at what happens when it crosses over going down on the 2-hour chart. Maybe you do an entry there for practice, and you also do a practice trade on the 4-hour chart if you don't know which one you want to use, and start setting up your own rules. Folks, there's no right or wrong way. The way that you learn how to do this is through experimentation, and things change season by season, year by year. How long do you do something? As long as it works. How do you find out if things work? Well, you experiment with them. You also backtrack. That is, you go back in time and you look at maybe the prior year around the same season. How was the 4-hour chart working? How was the 2-hour chart working? Have they been working lately? So again, those are things that can really help you, because again, we're looking at the charts as being a roadmap showing us what's happened in the past and what might be happening in the future, so that we can do what? Forecast? No, trend follow. Okay, folks, let's keep pushing through these charts a little quicker now that we've gone through that first chart and sort of gotten warmed up. See what's going on QQQ. Derivative oscillators continuing to lose energy. It's continuing to maintain at least a somewhat healthy distance between the red signal line and the price percent oscillator. We do have a nice up candle forming so far, and again, not as high as it was in past weeks, with that week ending the 28th of July, but we've seen really the market slide sideways when it comes to the NASDAQ 100, which is what QQQ is. So we'll continue to pay attention to that on the weekly. We're still in a confirmed down move, of course. The 2-day chart continuing to, again, slide sideways as far as the price percent oscillator goes. Derivative oscillators continuing to gain downward energy, even though we see a green up candle that's actually surpassed the height of the last big down move on the 11th. So continue to watch, see what the 4-hour chart shows us. It again, that pullback is underway since the vertical crossover on the 4-hour chart back at noon on the 15th. That is on Tuesday the 15th. How high will it go? Will it be enough to pull the 2-day chart over? Don't know, but the pullback is underway if and when it crosses over going down. Again, for instance, like it did in the afternoon on Wednesday the 9th, if you see a signal like that, a crossover going down, then of course be ready to pull the trigger and jump into a down move on QQQ. Now when you say, why would I buy any kind of security or equity that's going down? Well, you don't. What you would jump into would be something like PSQ, which is the short of the QQQ. So you would buy something like PSQ when it comes to the NASDAQ 100. It's the opposite of QQQ. And SH is the opposite of the S&P 500. That is SPY. So again, those are things to look at when we're doing inverse trades. Isn't that beautiful? You can make money when the market is going up or down. It's sideways that can give you a problem. Okay, let's keep moving through these charts. Did I go through the 4-hour? Yes, I did. Okay, wanted to make sure. We had some of you really asking to make sure that we covered all the time periods so you could properly fill out your daily market and your weekly market worksheet once a week, your daily market worksheet every other day, and we will try to endeavor to do that. What do we see going on with TLT? So confirmed up move on the weekly chart. weekly chart was up for the day 0.37%. We still don't have the derivative oscillator in the positive. Of course, the price percent oscillator is. As we look at our 2-day chart, we see that it's continuing to, again, stay positive as far as the price percent oscillator goes, seeing some down movement staying above the 2-day and well above the weekly at this point. But we do see it's continuing to be positive. Now, what's going on the 4-hour? 4-hour is, of course, crossed over going down there in the afternoon on Tuesday the 15th. Looks like it tried to bottom out in the morning on Wednesday the 16th, started moving up in the afternoon. If you see this 4-hour chart crossing over going up, would love to see the derivative oscillator, which is getting actually more negative, love to see it cross over going up. At the same time, you see a crossover going up on the 4-hour price percent oscillator. When the price percent oscillator crosses over going up, that's the time to consider pulling the trigger to jump into an up trade on bonds. Now remember, bonds typically are inversely related to the stock market. If the stock market's going down, people tend to look for the bonds to be a safe haven. That means bonds usually go up. Same with gold that we'll move into next. Typically, that's the way things are supposed to work. There's a lot of naked shorts on gold, a lot of screwing around with it. Doesn't always work that way these days as it has in the past, but let's look at the gold chart. We see that we had the weekly vertical crossover for the week ending last Friday, the 11th of August, and we see that gold has been going up for going on 5 weeks now. Nice, clean, positive up movement. Beautiful hook up here on the gold trend line. We have 3 weekly candles connected. This latest week is just now drawing, of course. What do we see going on the 2-day chart? It's flattened out for the time being. We have 2 spinning red tops, and of course, those tell us that we've got some indecision. We had a big up move on that candle on the 11th, ending on the 11th, that 2-day candle. And for the last 3 days, we've had sort of a spinning top sideways move. Let's see what the 4-hour chart's telling us. 4-hour chart is in the middle of the backup, again, going in the opposite direction of the weekly and the 2-day. And once it crosses over going up, that's the potential for you to pull your trigger on an up move. My friends, that is where we are as we end the day on Wednesday and go into Thursday. Again, I know what I was going to tell you at the very end. I was going to cover with you that quarterly chart for the S&P 500. And again, we'll keep you posted as these charts continue to develop, the ones that we go over every day. But this quarterly chart is absolutely beautiful when it comes to how well it works. We saw the market top off sometime, what was that, in September of 2000, and then we had that huge rundown through 2004. Would have gotten you out of the market during that time period, or had you short the market long term. And then when it crossed over going up, would have had you getting in there at the end of at the beginning of the year in 2005 for the beautiful run up, and then would have gotten you out right as the market started rolling over in mid-2008, and would have kept you out until the market rotated going back up again on that would have been the second candle for the year, then on the 31st of March 2011 for the latest run-up. And then, of course, we had the Trump effect that we talk about in the training. If you have not had this training yet and you're interested in it, 2 things. First thing, you have to be a subscriber to the Daily Market Review. That's easy to do. It's free. You go to chartingwealth.com, put in your first name and your email address. We will sign you up. Then, when you get your first Daily Market Review, just simply reply to that and say, Charting Wealth team, please send me the quarterly chart training. You mentioned quarterly anywhere on there, we will send you the link to the quarterly chart training. That's all you got to do. God bless, my friends. You have questions, problems, concerns, you can always write us cw@chartingwealth.com. You can also just email us right from the Charting Wealth website. All the best. We love to hear from you. You need help. You need Questions answered, problems, concerns, let us hear from you. All the best from the whole team here at chartingwealth.com.